Question 1. Which of the following is a key factor when underwriting a cyber insurance policy for a company in the financial sector? A. The company's total annual revenue and employee headcount. B. The company's track record of cyber incidents, including past data breaches or ransomware attacks. C. The company's geographic location and presence in certain states. D. The company's use of social media and digital marketing strategies. Answer. B. The company's track record of cyber incidents, including past data breaches or ransomware attacks. Explanation. When underwriting a cyber insurance policy, one of the most critical factors is assessing the company's history of cyber incidents. A financial institution with a past of frequent data breaches or ransomware attacks is considered a higher risk, affecting both the pricing and availability of coverage. The company's ability to demonstrate robust cybersecurity measures and mitigation strategies can help reduce its risk profile, while factors such as total revenue or geographic location may influence premiums. The company's incident history plays a far more significant role in determining risk. The use of social media or digital marketing strategies is not directly relevant to cyber insurance underwriting. Question 2. Scenario. Sarah is a network security manager for a mid-sized e-commerce company. The company recently experienced a distributed denial of service (DDoS) attack which temporarily disrupted its website and affected sales. The company has a cyber insurance policy that includes business interruption coverage. What should Sarah do next to ensure that the company's claim for business interruption losses is processed properly? A. Sarah should immediately inform the insurance company detailing the attack and the financial impact and begin the claim process. B. Sarah should wait until the attack has fully subsided before contacting the insurer, as premature reporting could cause delays. C. Sarah should contact the company's IT department to fix the website and assume that the insurance claim will be automatically triggered. D. Sarah should attempt to resolve the incident internally without notifying the insurance company, as business interruption claims are typically not covered under cyber insurance. Answer. A. Sarah should immediately inform the insurance company detailing the attack and the financial impact and begin the claim process. Explanation. In the event of a cyber incident that causes business interruption, it is crucial to notify the insurer as soon as possible. Insurance policies often have strict timelines for reporting claims, and failing to notify the insurer promptly could result in the denial of coverage. Sarah should gather detailed information about the attack, its duration, and the financial losses incurred, as this will be needed for the claims process. Option B is incorrect because delayed reporting may violate policy terms. Option C focuses on internal resolution but ignores the necessary claims process. Option D is incorrect because business interruption is typically covered under cyber insurance, especially in cases like DDoS attacks, depending on the policy. Question 3. Which of the following is typically excluded from cyber insurance coverage? A. Data breaches caused by malicious insiders. B. Damages resulting from a company's failure to implement proper encryption measures. C. Loss of revenue due to a network outage caused by a third-party vendor. D. Costs associated with defending against regulatory investigations after a data breach. Answer. B. Damages resulting from a company's failure to implement proper encryption measures. Explanation. Cyber insurance policies often have exclusions for losses stemming from the insured's own failure to implement necessary security measures. In this case, if a company fails to encrypt sensitive data and a breach occurs, the damages resulting from this failure may not be covered. Option A is incorrect because data breaches caused by insiders are typically covered by cyber insurance. Option C is incorrect because losses resulting from vendor-related incidents can often be covered under business interruption or network security liability. Option D is incorrect as many cyber insurance policies cover costs related to defending against regulatory investigations as long as the company complies with legal and regulatory requirements. Question 4. Which of the following best describes first-party coverage cyber insurance policy? A. Coverage that protects the insured business from lawsuits filed by third parties due to data breaches. B. Coverage that reimburses the insured for losses directly incurred due to a cyber event, such as data breaches or business interruption. C. Coverage that reimburses the insured for fines and penalties imposed by government regulators following a cyber incident. D. Coverage that extends to third-party vendors who are affected by the insured's data breach. Answer. B. Coverage that reimburses the insured for losses directly incurred due to a cyber event, such as data breaches or business interruption. Explanation. first-party coverage is designed to cover losses that directly affect the insured business. This can include expenses resulting from data breaches, business interruptions, cyber extortion, ransomware, and the costs associated with restoring lost or compromised data. Option A refers to third-party coverage, which covers liability for claims from external entities. Option C typically refers to regulatory fines and penalties, which may not always be covered under first-party coverage unless specifically included. Option D is more applicable to third-party coverage, which extends to others impacted by the insured's cyber event. Question 5. Which of the following best describes the concept of cyber extortion under a cyber insurance policy? A cyber incident in which hackers infiltrate a company's network and steal sensitive data for the purpose of selling it to competitors. B. A situation where cyber criminals demand payment from the insured in exchange for preventing a cyber attack, such as ransomware. C. The unauthorized access and modification of a company's data, resulting in the disruption of its operations. D. A denial of service attack on a company's website designed to prevent access to its online services. Answer B. A situation where cyber criminals demand payment from the insured in exchange for preventing a cyber attack, such as ransomware. Explanation. Cyber extortion typically refers to situations where cyber criminals demand money or other resources in exchange for not launching a cyber attack or stopping one that has already been initiated. This is most commonly seen in the form of ransomware attacks, where hackers encrypt a company's data and demand payment for the decryption key. Option A describes data theft, which is a different type of cyber crime. Option C is closer to the definition of a data breach or system compromise, but not extortion. Option D refers to a DDoS attack, which may be part of cyber extortion tactics but does not encompass the broader definition of extortion itself. Question 6. Scenario. Alex is an IT manager at a healthcare organization that recently experienced a data breach involving patient health records. The breach was caused by a cyber attack, and the insurance policy provides both first-party and third-party coverage. The company is required to notify affected individuals within 30 days according to HIPAA regulations. What is Alex's next step to ensure that the company complies with all legal and regulatory requirements for the claim? A. Alex should immediately notify the insurance company and begin gathering all documentation of the breach. B. Alex should delay notifying the insurance company until the IT team has resolved the issue and ensured no further data has been compromised. C. Alex should send an email to affected individuals and assume the insurance claim will be triggered automatically. D. Alex should avoid reporting the breach to the insurer until the forensic investigation is completed to understand the full impact. Answer A. Alex should immediately notify the insurance company and begin gathering all documentation of the breach. Explanation. Under HIPAA regulations, healthcare organizations must notify affected individuals within a specific time frame, typically 30 days, following a data breach. Alex should immediately notify the insurance company to begin the claims process and ensure compliance with both regulatory requirements and the terms of the policy. Option B is incorrect, as delaying notification could violate the policy terms and result in a claim denial. Option C only addresses the notification to affected individuals and does not consider the insurance claim process. Option D is also incorrect, because reporting the breach promptly is necessary for timely claims processing even before the full forensic investigation is concluded. Question 7. Which of the following factors is least likely to influence the pricing of a cyber insurance policy? A. The company's history of previous cyber incidents and claims. B. The security measures in place, such as encryption, multi-factor authentication, and employee training. C. The company's stock price and overall market performance. D. The industry in which the company operates, such as healthcare or finance. Answer C. The company's stock price and overall market performance. Explanation. While a company's stock price and market performance are important for investors, they generally do not directly influence the pricing of a cyber insurance policy. Pricing is primarily based on factors like the company's past cyber incidents, A. The strength of its cybersecurity measures, B. And the industry it operates in, D. That some sectors face more cyber risks than others. Healthcare and financial sectors, for example, often have higher premiums due to the sensitive nature of their data. The company's financial performance is not typically a risk factor considered by insurers when determining cyber risk. Question 8. Which of the following is an example of an intentional act exclusion in a cyber insurance policy? A. A company's employee accidentally clicking on a phishing link causing a security breach. B. A company's leadership failing to implement a recommended cybersecurity policy leading to a breach. C. A hacker deliberately exploiting a known vulnerability in the company's system to steal data. D. A contractor intentionally deleting sensitive data as part of a revenge act. Answer D. A contractor intentionally deleting sensitive data as part of a revenge act. Explanation: intentional acts exclusions in cyber insurance policies typically exclude coverage for losses that are deliberately caused by employees, contractors, or others with malicious intent. In this case, a contractor intentionally deleting sensitive data would be excluded from coverage under most policies because the loss was caused by an intentional act. Option A involves an unintentional action and would likely be covered. Option B relates to negligence but does not involve an intentional act, making it unlikely to fall under an intentional act exclusion. Option C describes a hacker exploiting a vulnerability, which would generally be covered under the policy unless there was a known vulnerability that the insured failed to address. Question 9. Which of the following is a key element of a cyber insurance policy's network security liability coverage? A. Protecting a company's network against physical intrusions or theft. B. Reimbursing a company for the cost of restoring or replacing physical assets after a cyber event. C. Providing coverage for third-party claims arising from a failure to protect a network from cyber threats. D. Covering legal fees for regulatory investigations following a cyber incident. Answer: C. Providing coverage for third-party claims arising from a failure to protect a network from cyber threats. Explanation: network security liability coverage is designed to protect a business from third-party claims arising from failures in network security. This includes breaches, hacking, and other cyber incidents where external parties are impacted. For example, if a customer's data is stolen due to a network vulnerability, the insurer would cover the cost of defending against a lawsuit and paying any resulting damages. Option A is incorrect because network security liability relates to cyber threats, not physical theft. Option B refers to property coverage, not network security liability. Option D involves legal fees but would fall under other types of coverage, not specifically network security liability. Question 10. Which of the following would typically not be covered under a cyber insurance policy? A. Costs to restore encrypted data following a ransomware attack. B. Lost income due to a network downtime caused by a cyber event. C. Legal fees for defending against a lawsuit for intellectual property theft resulting from a cyber incident. D. Regulatory fines imposed after a company fails to comply with data protection laws. Answer: D. Regulatory fines imposed after a company fails to comply with data protection laws. Explanation: most cyber insurance policies explicitly exclude coverage for regulatory fines. These are penalties imposed by regulators for non-compliance with laws such as GDPR, HIPAA, or CCPA, while cyber insurance often covers legal defense costs and the expenses related to cyber incidents like restoring data or lost income. Regulatory fines typically fall outside the scope of coverage. Option A would be covered under first-party coverage for ransomware attacks. Option B would be covered under business interruption insurance. Option C would be covered under liability coverage for intellectual property theft caused by a cyber event. Question 11. Which of the following is a common requirement for a company to be eligible for cyber insurance coverage? A. The company must have a formal written incident response plan. B. The company must conduct a yearly penetration test by an external vendor. C. The company must have a cybersecurity certification from a government agency. D. The company must use only open source software in its operations. Answer A. The company must have a formal written incident response plan. Explanation: a formal written incident response plan is often a requirement for cyber insurance as it demonstrates that the company has prepared for potential cyber incidents. Many insurers require businesses to have plans in place to mitigate and respond to cyber threats, while external penetration tests and certifications may enhance a company's security posture. They are not always mandatory for cyber insurance eligibility. Open source software usage is not a typical requirement for cyber insurance. Question 12. Which of the following best describes the concept of social engineering in the context of cyber insurance? A. A cyber attack where an intruder bypasses physical security measures. B. The manipulation of individuals into divulging confidential information for fraudulent purposes. C. The encryption of data to prevent unauthorized access. D. The use of bots to perform malicious tasks on a website. Answer: B. The manipulation of individuals into divulging confidential information for fraudulent purposes. Explanation: social engineering involves manipulating individuals into revealing confidential information such as passwords or account details, often by impersonating legitimate parties. This is commonly done through phishing emails or phone calls. Option A refers to physical security breaches, C refers to encryption, and D refers to automated bot attacks, all of which are different from social engineering. Question 13. Scenario: a company experiences a data breach when an employee's laptop is stolen containing sensitive client information. The company has a cyber insurance policy with both first-party and third-party coverage. Which of the following is most likely to be covered under the first-party coverage? A. The cost to notify affected clients about the breach. B. A lawsuit from a client whose information was exposed. C. Legal fees associated with defending the company in a lawsuit. D. Regulatory fines imposed by the government due to the breach. Answer A. The cost to notify affected clients about the breach. Explanation: first-party coverage typically covers the direct costs incurred by the insured business as a result of a cyber incident. In this case, the costs to notify affected clients would be covered under first-party coverage. Options B and C are more aligned with third-party liability coverage, which covers lawsuits and defense costs. Option D refers to regulatory fines, which are typically excluded from coverage. Question 14. Which of the following is an example of a data breach under a cyber insurance policy? A. A hacker accesses a company's database and steals personal information of customers. B. A business experiences a DDoS attack that causes its website to go offline for several hours. C. An employee accidentally deletes important data from a company's server. D. A contractor installs malicious software on a company's network without authorization. Answer A. A hacker accesses a company's database and steals personal information of customers. Explanation: a data breach occurs when unauthorized individuals gain access to sensitive data. In this case, the hacker stealing customer information is a classic example of a data breach. Options B, C, and D describe other cyber incidents but do not specifically involve unauthorized access to sensitive data, which is the core definition of a data breach. Question 15. Which of the following factors could result in higher premiums for a cyber insurance policy? The company's comprehensive employee cybersecurity training program. B. The use of advanced encryption technology in data storage and transmission. C. The company's history of cyber incidents and claims. D. The company's use of cloud services for data storage. Answer C. The company's history of cyber incidents and claims. Explanation: a history of previous cyber incidents or claims typically results in higher premiums, as insurers perceive the business as a higher risk. Options A and B may reduce risk and result in lower premiums. The use of cloud services, option D, does not necessarily increase premiums, but may require specific policy terms related to third-party risks. Question 16. Which of the following is least likely to be covered under a standard cyber insurance policy? A. Loss of business income due to a cyber attack. B. Costs of restoring damaged or stolen data. C. Legal expenses for defending against a third-party lawsuit related to data theft. D. Theft of physical hardware, such as laptops or servers. Answer D. Theft of physical hardware, such as laptops or servers. Explanation: cyber insurance typically does not cover theft of physical hardware, which would be covered under property or general liability insurance. The other options, A, B, and C, are commonly covered under cyber insurance policies as they involve losses or liabilities related to cyber incidents or data breaches. Question 17. What does business interruption coverage (ECA) cyber insurance policy typically cover? A. The cost to replace damaged hardware and software after a cyber incident. B. Loss of income due to a cyber event that disrupts the company's normal operations. C. Legal defense costs for defending against a third-party lawsuit. D. The cost of recovering stolen data from a cyber attack. Answer B. Loss of income due to a cyber event that disrupts the company's normal operations. Explanation: business interruption coverage is designed to compensate the insured for lost income resulting from a cyber event that disrupts normal business operations. This could be caused by things like a ransomware attack that brings down the company's systems. The other options refer to different aspects of cyber insurance coverage, such as data recovery or legal defense costs. Question 18. Which of the following is an example of a third-party liability claim under cyber insurance policy? A. A company incurs costs to restore its own data after a ransomware attack. B. A client sues the company for failing to protect their personal data in a data breach. C. A company experiences a system outage and loses income as a result. D. A business incurs legal fees after an employee steals customer data. Answer: B. A client sues the company for failing to protect their personal data in a data breach. Explanation: third-party liability coverage under cyber insurance policy covers claims made by external parties such as customers, vendors, or business partners who are harmed by the insured cyber incident. In this case, the client suing for data breach-related damages is a classic example. Option A would be covered under first-party coverage, C under business interruption coverage, and D could fall under employee dishonesty, which might not be covered under a standard cyber policy. Question 19. Was cyber liability insurance primarily designed to cover A. the costs of repairing physical damages caused by a cyber attack, B. the costs associated with defending against lawsuits arising from data breaches and other cyber events, C. the cost of purchasing new equipment after a cyber attack, D. losses from stock market volatility due to a cyber incident? Answer: B. The costs associated with defending against lawsuits arising from data breaches and other cyber events. Explanation: cyber liability insurance is primarily designed to cover legal costs, settlements, and damages resulting from third-party claims following a cyber event. This could include lawsuits related to data breaches, privacy violations, or intellectual property theft. Options A and C are more related to property insurance, while D is outside the scope of cyber liability. Question 20. Which of the following best describes a ransomware attack covered under a cyber insurance policy? A. A company's data is stolen and sold on the dark web by cyber criminals. B. A hacker locks the company's data and demands payment to unlock it. C. A system vulnerability is exploited to steal sensitive information. D. A company's server is physically damaged during a cyber incident. Answer: B. A hacker locks the company's data and demands payment to unlock it. Explanation: a ransomware attack involves cyber criminals encrypting a company's data and demanding payment, usually in cryptocurrency, for the decryption key. This is typically covered under cyber insurance policies. The other options describe different types of cyber incidents, such as data theft A or system compromise C, but do not specifically involve ransomware. Question 21. Which of the following would most likely be covered under a cyber insurance policy with cyber extortion coverage? A. The costs of defending against a hacker's lawsuit. B. Payments made to regain control of a system after a ransomware attack. C. The legal costs of defending against a third-party data breach lawsuit. D. Loss of income due to a prolonged system outage. Answer: B. Payments made to regain control of a system after a ransomware attack. Explanation: cyber extortion coverage typically includes costs related to ransomware attacks, such as the payment to cyber criminals to regain access to the company's systems or data. The other options are covered under different types of coverage, such as liability or business interruption coverage. Question 22. Scenario: a company's website is defaced and becomes the target of a DDoS distributed denial of service attack, making it inaccessible for several days. Which type of coverage would most likely help the company recover its losses? A. First-party business interruption coverage. B. Third-party liability coverage. C. Cyber extortion coverage. D. Network security coverage. Answer: A. First-party business interruption coverage. Explanation: first-party business interruption coverage helps cover the loss of income due to disruptions in business operations, such as the downtime caused by a DDoS attack. Network security coverage would address vulnerabilities exploited in the attack, while cyber extortion coverage applies to ransom situations, and third-party liability coverage relates to claims from external parties. Question 23. Which of the following is a key component of a cybersecurity risk assessment required by insurers when purchasing cyber insurance? A. An evaluation of physical security measures in place. B. A review of employee training on data security and privacy. C. A comprehensive list of all office furniture and equipment. D. An analysis of the company's social media strategy. Answer: B. A review of employee training on data security and privacy. Explanation: cyber insurance providers often require businesses to conduct a cybersecurity risk assessment to evaluate various aspects of their security posture, including employee awareness and training on data security and privacy. This is a critical component to reduce the risk of human error, which is a major cause of data breaches. The other options are not directly related to cyber risk assessments. Question 24. Which of the following cyber incidents would typically be excluded from coverage under a standard cyber insurance policy? A data breach caused by an employee clicking on a phishing email link. B. A cyber attack involving the theft of customer data due to poor security practices. C. A breach caused by a vendor's failure to secure its network. D. A data breach caused by a nation-state actor during an ongoing conflict. Answer: D. A data breach caused by a nation-state actor during an ongoing conflict. Explanation: many cyber insurance policies exclude coverage for losses resulting from acts of war, including those perpetrated by nation-state actors during conflicts, while the other options involve incidents that are generally covered. A war-related attack is usually excluded under a standard cyber insurance policy. Question 25. Which of the following best describes a business continuity plan B and its relationship to cyber insurance? A BCP is a plan for responding to financial fraud and is required for all cyber insurance policies. B. A BCP is a plan for maintaining business operations after a cyber attack and can help reduce insurance premiums. C. A BCP is a document that outlines the physical security measures in place and is unrelated to cyber insurance. D. A BCP is a plan for tracking employee performance and does not affect cyber insurance. Answer: B. A BCP is a plan for maintaining business operations after cyber attack and can help reduce insurance premiums. Explanation: a business continuity plan (BCP) is a proactive strategy that ensures a company can continue operating after a disruptive event, such as a cyber attack. Insurers may offer reduced premiums or better coverage to companies that have a well-documented BCP, as it reduces the risk of significant downtime and financial loss. Question 26. What is typically the role of a data breach notification coverage in a cyber insurance policy? A. To cover the cost of defending against lawsuits related to the breach. B. To cover the costs associated with informing affected parties about the breach. C. To reimburse the company for the cost of purchasing new hardware. D. To cover the loss of income due to the breach. Answer: B. To cover the costs associated with informing affected parties about the breach. Explanation: data breach notification coverage generally covers the costs associated with informing customers or employees whose data was compromised in a breach. These costs may include mailing notifications, setting up credit monitoring services, or managing public relations efforts. The other options refer to other types of coverage: liability, hardware replacement, or business interruption. Question 27. Which of the following types of cyber insurance coverage is designed to cover the loss of data due to a cyber attack or system failure? A. Property damage coverage. B. Data restoration coverage. C. Business interruption coverage. D. Third-party liability coverage. Answer: B. Data restoration coverage. Explanation: data restoration coverage is designed to cover the costs of recovering lost or corrupted data due to cyber incidents like hacking, ransomware, or hardware failure. The other options cover property damage, loss of income, or third-party liability, but not the direct costs associated with data recovery. Question 20. Which of the following is a primary factor that affects the cost of a cyber insurance policy? A. The size and financial stability of the insurer. B. The company's annual revenue and net worth. C. The company's cybersecurity posture, including its risk management strategies. D. The company's location and the geographical region of its clients. Answer: C. The company's cybersecurity posture, including its risk management strategies. Explanation: the cost of cyber insurance is primarily influenced by the company's cybersecurity risk profile, including its security measures, risk management practices, and history of previous incidents. Insurers assess the potential risk posed by the company's operations and the strength of its defenses. While company size (option B) may influence premiums to some extent, the cybersecurity posture is a more significant factor. Question 29. Which of the following is typically an OTA requirement for obtaining cyber insurance coverage? A. The company must have multi-factor authentication (MFA) in place for sensitive systems. B. The company must have a comprehensive data encryption policy. C. The company must maintain a certain number of employees in its IT security department. D. The company must conduct regular vulnerability assessments. Answer: C. The company must maintain a certain number of employees in its IT security department. Explanation. While many insurers require certain technical and operational practices such as multi-factor authentication, MFA, encryption, and regular vulnerability assessments, they typically do not mandate a specific number of employees in the IT security department. The other practices are common requirements for cyber insurance policies. Question 30. Which of the following could potentially trigger a cyber insurance claim under network security coverage? A. An employee loses a company laptop that contains sensitive data. B. A hacker accesses a company's network and steals confidential information. C. A business suffers a financial loss due to a delayed shipment caused by an IT issue. D. A company experiences a natural disaster that damages its servers. Answer. B. A hacker accesses a company's network and steals confidential information. Explanation. Network security coverage typically applies when an external attacker compromises a company's network, such as through hacking malware, or other types of unauthorized access. Losses resulting from physical damage, like option D, or employee error, option A, are usually not covered under network security, though they might be covered under other types of insurance.